Welcome to Stock Talk with Nico Kritikos. Today we're going to be going through some of the biggest companies' earnings. Okay, we have Apple today, we have Microsoft, we have Google, Starbucks, and then I threw in Teledoc Health and the Cheesecake Factory as well, just because those are two stocks I've owned in the past. So first up, we have Apple, and after hours, it's not really doing much. It's just sticking around this $145 range. But Apple had a great earnings report. They beat EPS by 29 cents, and they beat revenue up over 36% year over year. Okay, so that's fantastic for Apple. The big thing here was the iPhones. The iPhones, they made $39.5 billion versus $34.5 billion. So huge beat with iPhones. And then, of course, Macs, iPads, wearables, the services were all up too. So great report for Apple, but stock's not really moving much. They also announced that they're going to keep paying a dividend of 22 cents. So good news there. Then next one on the list is Microsoft, and it says Microsoft beats earnings expectations on cloud and personal computing growth. And also a great earnings report for Microsoft, $46 billion of revenue this quarter versus $44 billion expected. EPS was $2.17 versus $1.92. And everything was up big. The cloud was up big. The only problem here is if we look at the stock, I did read something about they lost a contract with the government because it was put in place while Trump was in office, and supposedly it wasn't a fair contract or something. So the stock's down a little over 2%. Not a huge deal, but still just something to keep an eye out for. And I mean, Microsoft's I don't own the stock personally, but I don't own Apple or Microsoft, but those are safe companies to be in. Next up, we have one that I do own, and this is Google, okay? This one is the most surprising because Google, we could see that Alphabet jumps after easy Q2 beat with operating income tripling. So revenue shot up 62% to $61 billion in Q2, 10% over analysts' estimates, and EPS rose 169% to $27. That is insane, topping expectations by more than 41%. So the stock is being rewarded for that. After hours, it's up 2.8%. It was even up more. And Google, I own 2 shares. I bought it last year when it was $1,400 a share a piece. I should have bought a lot more. I should have put like $5,000 into the stock, but I didn't. And so we're up pretty nicely on this one, 90%, 91% gain, a little over $2,500. So that one, I don't plan on selling Google anytime soon. No matter, I don't care if the stock was like, if it went to over $3,000 tomorrow, I still would not sell Google. But revenue was up huge. Operating income was up huge, more than tripled to $19 billion, with operating margins increasing to 31%, from previously 17%. And it says our strong second quarter revenues of $61 billion reflect elevated consumer online activity and broad-based strength in advertising spend. The other thing I noticed was another one of my stocks, Trade Desk, was also up big today, and after hours it's not really doing too much, it looks like. But Trade Desk is also, their whole business is advertising, and so that's why Trade Desk has been performing outstanding lately. And they report earnings on August 5th, so that'll be in a couple days here. But yeah, next up we have, if we want to see the revenue breakout for Google, we can see that Google Search and others, $35 billion, up 68%. YouTube ads contributed $7 billion to revenue, which was up 83%. So YouTube is the big, there's other big growth vectors here like the cloud and the Google network, but YouTube is really their big opportunity here, the one that's growing the fastest. YouTube ads contributed $7 billion, up over 83% over the past year. So crazy how fast YouTube ads are growing. And next up we have Starbucks. Starbucks is a little bit different because Starbucks is up a lot over the past year. If we look at the stock chart, we can see that it's up over 60%, Starbucks. And so Even though they reported great earnings, EPS was $1.01 compared to 78 cents expected. Revenue was 7.5 billion versus 7.29 billion. And it said that the only thing was that the recovery in China was going to take longer than expected. And they're saying, despite raising its overall outlook for fiscal 21, it lowered its full year forecast for the country's same store sales growth. So, I mean, the stocks ran up a lot, and if they don't have fantastic earnings and fantastic guidance, then it kind of makes sense why the stock's not going to move much. But it looked like their earnings beat was fueled by strong cold beverage sales in the United States. So there's that. And let's see, Starbucks today is down 3% after hours. So it is what it is. Next one, Teledoc Health. This is another stock that I owned it before, and I sold out of it a couple of weeks ago just because I felt like the valuation was high, and I felt like they did have a point with for how much this stock has. If you look over the past couple of years, this stock has ran so much, and a lot of investors were scared that a lot of their business had been sucked into 2020 because everyone was doing the virtual healthcare visits in 2020. So if anything, business was going to go down the following year. And if we look here, that is kind of what happened to some degree. They missed EPS by 32 cents, which was, and they're still losing money. That's the other problem. But revenue was beat. So this is crazy. Revenue of $500 million, up over 100% year over year. So that's fantastic for Teledoc, but their profitability is still a problem. And I mean, they have great gross margins, but the profitability is just not looking good here. So Teledoc, we can see that it's down over 7% after hours. So not very good for Teledoc. Now, let's see, their outlook for next quarter is okay. It looks like their revenue is growing, but the profitability is going down. So that's another reason I didn't want to be in this stock. I kept 10 shares just to see what happens. And like, I still think this is a good bet long-term. It's just the valuation so high. And I mean, $23 billion market cap for a company that keeps losing money. And like this past year, the past 12 months should have been their best, should have been them at their best. And they should have definitely reported a profit by now, but they haven't. So that's a bit of a problem for me. Final one on the list is the Cheesecake Factory. This is one that I own in the past. I bought this one during the pandemic, and I sold out for a good amount of money. I sold out a little bit early because I sold out at about $38, $39 a share, and now it did shoot all the way up to the 60s. But I just felt like I made a good amount of money, so I was happy with where it was. But Cheesecake Factory is not looking too great after hours, down over 6% after hours. And similar story with Cheesecake Factory is they missed EPS, but they beat on revenue. So again, the revenue numbers here are fantastic. Revenue of 769 million, up over 159% year over year. That's insane. That's fantastic. But the problem is just the profitability. And so, I mean, I know they're expanding a lot. They have new restaurant chains that they're working on, but they're going to have to figure out a way to make sure that doesn't happen again. So Cheesecake Factory is down over 6%. And that's pretty much all I have for you today. Thank you for watching, and I will catch you in the next video.